Scalpers think in minutes, day traders think in hours, and swing traders think in days. What is going on, guys? This is KOJOFOREX, aka GBP Legend, aka Sniper Trader, aka King of Blues. I'm back again with another YouTube video. Today I'm going to teach you guys, no, not even going to teach you, I'm going to tell you guys my 5 main rules, right? 5 main swing trading rules from my 10 years of trading experience. So sometimes I get a lot of people asking me, Kojo, what style of trading will make you profitable? Is it day trader, swing trader, scalper, whatever it is, right? There is no true answer to that, right? Any style of trading can make you successful. It depends on how consistent and then how perfect you brew that strategy you're using, right? So I personally have had the experience of learning how to swing trade, scalp, and then day trade. I actually started trading as a scalper, right? I used to trade on the lower time frame, 1 minute, 5 minutes, you know, all delving into the lower time frame, and I was exceptionally good at that. I did that for a couple of years, then I graduated into day trading, right, using the 15-minute, 30-minute, 1 hour, then eventually turning out to be a swing trader, right? Now I'll tell you the evolution between all those processes and why finally I settled on swing trading, right? So swing trader these days, then you have me really delving into the 2-hour time frame, the 4-hour daily, and so on and so forth, right? So the main reason why eventually I settled into swing trading is because, you know, as time goes on as a trader, you're gonna, like, you know, be making the money, you're growing, you're adding other endeavors, other responsibilities. You may not necessarily have the luxury of time that you had back then to be sitting fixated by the screen watching the 5-minute, 1 minute, every tick and thing in the market, right? And the same with the day trading as well. So I eventually, you know, transformed my knowledge into, like, applying into the higher time frame basis, which basically has everything to do with swing trading, where I look at the market, you know, once in a while and then think on a daily or weekly basis, in the sense that when I take a trade, I know that it's going to materialize after a day, 2, 3 days, and at the same time too, trades do not necessarily come around, you know, often as it would have when I was a scalper or day trader, right? So, like, to not really beat about the bush, let's go straight into the point. Like, this is my 5 main swing trading rules from my 10 years of trading experience. Number 1 is swing trading takes time to form, right? What you must understand is that swing trading is not like, you know, the way we would have scalping, right? So I'm going to be showing certain things on the screen as well while I explain these 5 main processes, right? So if you think about swing trading, they do not just come around like the way we have, like, you know, scalp trades where you're always waiting for, you know, that 5-minute formation or 1 minute formation, which can happen within a couple of minutes, barely 5-10 minutes. You can have a scalp trade. The same with day trading, where you're watching a 15-minute, you know, 30-minute. But swing trading, because sometimes you're watching the daily time frame, hourly time frame, whatever it is, right? You must understand that, like, it takes time for even a 4-hour candle to form. It takes literally four good hours before you have one 4-hour candle forming, right? Think about it that way, right? It takes 4 good hours. So if you want to have, like, if let's say you're waiting for 2 confirmations or 3 confirmations, it means that you're waiting for what, 4 hours, 8 hours, 12 hours, which is half of a day before you can have, like, 3 confirmations on a 4-hour time frame. But if you're using 1 minute time frame, basically like 3 minutes, then you have your confirmation, right? So it means that swing trading takes time to form. It takes time for all these candles to keep building and then, you know, printing that formation that you want to see on the market before you can even take any decision. So that's number 1. Number 2 of my 5 swing trading rules is that swing trading, you must analyze on the higher time frame, right? So why do I say that you must analyze on the higher time frame? Like the statement I just said in the introduction, scalpers think in minutes, day traders think in hours, and then swing traders think in days. So it means that, you know, swing trading, you must analyze in the higher time frame, relatively high time frame. That I'm talking about the 2 hours, the 4 hours, the daily time frame, right? It's because we are talking about swings, right? Let me explain to you what I mean necessarily when I say swings, right? So you see, let's use Euro New Zealand, right? Let's just look at this portion of the market, right? So from this bottom here to this top here is one swing. From that top there to this down here is another swing. From this very bottom to this space is also another swing, and then currently we are at this next swing level, right? So if you think about it in that picture, a day trader could have been getting, let's say, jumping in around, let's say, a day trader could jump in within this swing move, maybe around here, and then close here, right? A scalper could also jump in, let's say, around here and then just close here, because they're just catching with some few pips in the market and they are done. But for a swing trader, you're trying to, like, jump in at the very bottom, at very top of the range, and then holding that trade throughout to maybe the end of that swing move, and then finding opportunities or reasons that allow you to even be able to jump in next on this leg and then hold it up to this point. So that's what really differentiates day traders, scalpers, and then swing traders. Swing traders catch swing moves in the market, and then the very time frame that can allow you to see those swing move in a very clear way is the higher time frame, which is the 2 hour, 4 hour. If you're looking at this from the 5 minute, 10 minutes, 30, 15 minute, you are not necessarily representing the true swing point in the market. So that's also another one. The next one, right, number 3, is have immense patience. Look, like, if you do not have patience, like, don't even think about being a swing trader. If you know that you have problems with patience, then probably go and be a scalper. So number 1 rule in trading is that you must know yourself, right? You must really know yourself, know your persona, know your type, right? But nonetheless, what I wouldn't want to, or what I should even chip in here, is that every type of attitude or every type of characteristics that you need can well be built or formed from scratch, right? So if you're not patient, you can actually learn to be patient. If you also want instant gratification, right, you can learn to have delayed gratification, which is what swing trading is about, right? You can take your time, let trade materialize, right? So having immense patience is that, number 1, it has everything to do with, number 1, even like the patience you need before the setup will come around, and then number 2, the patience you need for the trade to even confirm before you jump in, right? So sometimes people that join my community that don't understand my style of trading, and even some of my social media followers ask me, Kojo, how come maybe this whole day, 2 days, 3 days, you've not traded? What is wrong? It is not because something is wrong. It's just because I really take my time to wait for the market to materialize and come into my favorite zone before I take any decision, right? So immense patience is one thing that you should not overlook as a swing trader. And then number 4th one is that allow trades to materialize, right? So if you're becoming a swing trader, you must understand that it doesn't work like day trading or scalping, where within 1 minute, 2 minutes, or let's say 30 minutes, a trade has played out, you're up, let's say 15 pips, 20 pips. Swing trading, sometimes you're waiting to catch at least 100 pips, 150, 200, sometimes even 800 pips, right? And then to be able to catch those kind of pip movements in the market, then it means that you really have to wait for the trade to materialize, right? So let's say you got in for a sell on Euro New Zealand here, and then because you just saw this, right, which should have been, let's say, how many pips in the market? About let's say 40 pips. You're so excited that, yeah, I just hit 40 pips in the market, let me just take my profit off. You put on, let's say, 0.5, you took it off. What it means is that you didn't allow the trade to materialize, right? You just traded like a day trader or a scalper, right? Your stop loss is here, the market just came here, and then you just took profit. You didn't allow the trade to materialize. Leaving the trade to materialize is that having the patience to know that, okay, this is my target for this market, let me see how far I can go, or even leaving it furthermore to even this point that you'd have been catching about 288 pips. That is the point that I would say you allow the trade to materialize. The last one in swing trading is that risk to reward is king, right? You must understand that in swing trading, risk to reward is everything, right? Just like I've just displayed here in Euro New Zealand, right? Imagine that trader that took that trade, putting stop loss at, let's say, 40 pips, and then the market just giving you a 40 pips, and then you're so excited, and then you close your position. You literally just close on 1:1. The next time you take a loss, you literally back to square zero, because 90 job, you took a trade, 40 pips in profit, it was a 40 pip in stop loss, you were so excited, you close the position out. Next trade, 40 pips in stop loss, and then that one went against you, you literally back to square zero, right? So risk to reward is everything in swing trading. Is because you are risking marginally higher than a day trader or a scalper would, because of the way you're analyzing a higher time frame. Specifically talking about me myself, so you want to really allow the trade to play out so that risk to reward would make a much greater difference, right? Let's say this trade would have been 1:8, right? If I had taken this trade and allowed it to materialize, I literally left the trade to run in 1:8, which means that if I raise 2%, that is 2:16%. So next time I lose 2%, then I'm losing 2% off the 16%. That means that I'll still be up 14%. You know, that's how we think as swing traders. So never forget these 5 rules. Number 1 is swing trading takes time to form. Number 2 is analyze on the higher time frame. Number 3 is have immense patience. Number 4 is allow trades to materialize. And number 5 is risk to reward is king. I hope this short video gives you in-depth insight if you really want to be a swing trader, right? Again, last thing that I'm going to chip in is that swing trading gives you the time and freedom to really enjoy what it means to be a trader. So sometimes I tell people that, why do you live a 9 to 5 and then come back to do a 9 to 5 on the market, right? Because if you're stuck by the screen day trading, scalping, waiting, watching till when, you're literally back to like the 9 to 5 job, right? Me, I just watch my market, I analyze. If there's no setup, I go by my other activities. If there is a setup, I take my trade, set my stop loss, and then go by the day, you know. So in that way, I have the freedom that trading actually gives, right? So yeah, this is my short 5 main rules from my 10 years of experience that I observe as a swing trader. You know what to do. Click in the link in the description to join the KOJOFOREX Telegram community. Smash the like button if you haven't done that, and also subscribe to the channel if you are a new viewer. If you're a returning viewer, I appreciate you watching this video. Without saying much, follow me on all social media at KOJOFOREX, especially Instagram. I'll see you guys in my next video. Peace out.